All right, here we are with the third and final part to the example for chapter 4. And in this one, we're going to be doing the closings and the post-closing trial balance. So here's our T-tables. Nothing has changed. Actually, this one doesn't have the retained earnings like the other ones did. So that's actually a good thing because we're not supposed to. We shouldn't have been there. So we need to do the closings first. And remember, the closings, we only affect the temporary accounts. We only close out the temporary accounts, or what I call the red accounts: revenues, expenses, and dividends. So I'm just going to go ahead and lay out those and only those. Get rid of the rest of them for right now. So there's our revenues, our expenses, and our T-tables. And we know that we close out our revenues and our expenses to an intermediate account called income summary. So let's go ahead and create the income summary T-table there. All right, so let's start with the R's, the reds, for the R in red, which is revenues. So sales revenue, we have a credit account of $30,000. So in order to get rid of that credit account, we need to debit it $30,000. And if we debit sales revenue $30,000, then we need to credit income summary T-table by $30,000 as well. So debit sales revenue, credit income summary, that's what our journal entry is going to be, our corresponding journal entry. All right, let's look at gain on the sale of land. Same thing, we have a credit of $2,500. So in order to get rid of it, we need to debit $2,500. That cancels that out. And if we debit gain on sale of land for $2,500, then we need to credit income summary for the same amount. So again, debit gain on the sale of land, credit income summary for $2,500. All right, let's look at sales revenue, or sales returns and allowances. I have a debit balance of $2,000. So in order to get rid of it, I need to credit that $2,000. And if I credit sales return allowances for $2,000, then I need to debit income summary for that $2,000. So again, my journal entry is going to be debit income summary and credit sales return allowance for $2,000. Same thing for sales discount. I'm going to credit sales discount for $100 to get rid of that, to close it out. And if I credit it, then I'm going to need to debit income summary for that $100. So I'll go ahead and do that. Journalize that. So debit income summary for $100, credit sales discount for $100. All right, now let's look at COGS. I have a debiting balance of $14,100. So to close it out, I will credit it $14,100. And if I credit it, then I will debit income summary for the same $14,100. My journal entry will be income summary for $14,001 and credit cost of goods sold for $14,001. S&A expense, same thing. I'm going to credit $3,000 to close that out. And if I credit it, then I need to debit income summary for $3,000. So I'll do that there. Journal entry will be income summary and selling and admin expense for $3,000. All right. Delivery expense, same thing. $300 on the credit side. That'll close it out. If I credit delivery expense for $300, then I need to debit income summary for $300. So I will do that. Do my journal entry. So income summary $300, delivery expense $300. And then finally, I have my interest expense, same thing, credit $250 to close that out. And if I credit it, I need to debit income summary. So I'll do that. And my journal entry will be income summary $250 and interest expense $250. Okay, so that takes care of that. Now I can total up my income summary, find my account balance for that, add up the debits, add up the credits, subtract the 2. That's going to give me $12,750. And the next step would be to close that out to retained earnings. Now, up to this point, we shouldn't have had a retained earnings T-table. So we're going to create one. And in order for me to get rid of that $12,750 on the credit side of income summary, I need to debit income summary by $12,750. And if I debit income summary by $12,750, then I need to credit retained earnings for $12,750. Now, the next step would also be to close dividends, but remember, we don't have dividends in this one, so we don't have anything else to do to retained earnings. So we can also total out retained earnings, put the journal entry there for debit income summary and credit retained earnings. But we can also total out retained earnings to be $12,750. And if we go back to our statement of retained earnings, we will see that it will match up to our ending retained earnings that we found on the statement of retained earnings, which is exactly what we want. So that takes care of the closings. Now the last thing we need to do to finish up this accounting cycle is to do the post-closing trial balance. So we need to go back to our original T-tables minus all the temporary ones. All I want to keep now is the permanent ones. And so that is all of the assets, the liabilities, and the equity plus the retained earnings. So if I list those out, that's going to be cash for $48,860, accounts receivable still zero, inventory for $8,890. Again, finish this up real quick. Land zero, AP zero, notes payables 10,000, common stock is 35,000, and now we have retained earnings of 12,750. If I add up the debits, that's going to give me a total of 57,750. And if I add up the credits, that's going to give me a total of 57,750. So we are good. We did the entire accounting cycle for a single problem. So hopefully that wasn't too terrible on you. I know it took three videos to do it, but you kind of get the idea of everything that goes into the accounting cycle. So hopefully that made sense. If you have any questions, please let me know in the comments below. Y'all have a good one.